Welcome to It's the Economy. The raft of data that is flowing for the June quarter is a tad confusing. It's mixed. First, the negatives. Auto sales for June for Maruti, Bajaj, TVS, Hero Motor were all below market expectations. Here are the sales running for you of the biggest car maker and the biggest two-wheeler maker, that's Maruti and Hero. Of course, SUVs or large cars have done much better than compact cars, but as you will see, compact cars down 17% year-on-year, and Hero Motor, of course, down 10% year-on-year in terms of sales. Now, coming to other consumer goods data from market research company Bizom, that is only for April-May, they show that consumer goods sales fell 17% in April and 12% in May. Jobs data, the Naukri Job Index for April-May was down 5% from Jan-March quarter and just marginal 0.5% from year ago. Another index put out by Foundit, which is a subsidiary of Quest Corp, another staffing company, says hiring has fallen 7% in May 2023 compared to year ago, May 2022 levels. Now, let's come to the India services exports, which has been such a winner. That number in May came in at $25 billion, which is down about 8% from the last 12-month average. However, there is two sets of data which is extremely strong. And let me put that also before I go to my guests. India's direct tax collection for April and May was up 12.3% over the year. I mean income tax, okay? I'm not including corporate tax because we will know that only in June when the advance taxes come. But income tax is up 12.3%, which is stronger than nominal GDP. Likewise, GST collections up 12% to 1.61 trillion. Again, at 12%, it's stronger than nominal GDP growth. So, should we worry about growth given the indications we get from consumption, which is already weak, even when we got the Q1 numbers, the Q4 GDP numbers? Or should we worry more about the headwinds that are ahead in the form of, El Nino, the second half of the Kharif, as well, whether we should worry also about some headwinds from global factors because of the likely increase in interest rates. Therefore, an impact on interest rate differential, impact on the currency. I have with me two of the best economists, perhaps, in India. Samiran Chakraborty, the Chief India Economist at Citibank, and Pranjul Bhandari, the Chief India Economist at HSBC. Pranjul, Samiran, thank you very much indeed for joining us. Samiran, you are the more optimistic of the two of you because you have a growth rate of 6.2%. Any worries at all because of the data we have just got in terms of jobs and consumption and auto sales? And any worries from what we may get in the form of, lower harvest or global headwinds?
Thanks, Latha. It's a nightmare quarter for economists to project growth because there would be a divergence between the so-called high-frequency data and the actual GDP data for the quarter. If you recall, last year, the high-frequency data was very strong in this period because we were just coming out of the third Omicron wave, whereas the GDP data was particularly weak. In general, there is a decline between the fourth quarter and the first quarter GDP data of around 3.5–4%. But last year, it was close to a 9% decline in GDP between the two quarters. So this year, that base will be favorable, and the GDP growth numbers, in our sense, will definitely be in excess of 8.5% for the quarter, if not closer to 9%, even if you assume significant quarter-over-quarter decline. So the point I'm trying to make here is that while we look at all this mixed data prints, where some of them are showing some sequential decline, we have to understand that part of this is purely seasonal between fourth quarter to first quarter. Part of this is a year-over-year base effect, which is playing out. And in general, we know that consumption has been relatively weaker, and investment/construction is now the primary driver of growth. So my sense is that story is broadly impact. Within consumption, there are two factors I would want to highlight. One is there's a shift from goods towards services, and urban consumption seems to be slightly better than rural consumption. So that's how I will characterize the current situation.
Okay. I'm not done with the growth questions, also because of your latest report on the harvest on inflation. But let me first ask Pranjul what she makes of the first quarter data. Is it disturbing you, Pranjul, even more? You're already sitting at the lower end of forecasts at 5.8%, but you feel confident of that? Does it have an upward or lower bias?
Thank you, Latha. Contrary to all the data that you've given, my sense is that activity has been remarkably strong and robust. You look at the GST collections numbers, they're looking good, particularly domestic GST. You look at corporate margins from the PMI we saw today, or also from the RBI database, which gives us for both small firms and large firms, they've shot up, in the quarter of March. You look at some of the formal sector indicators, even the production of consumer durables has picked up over the last, 2 months. You look at data from the central government and the state government, spending, that is really up. So I would say many things are actually doing pretty well. And I'm going to point it all to one thing, which is oil prices. I think in a way we've completely forgotten that last year oil prices averaged $100 a barrel. And right now we are at $75 a barrel. And this $25 a barrel fall, if it persists, then it itself can give us a boost of GDP of about 50 basis points. So I think that's a big positive, that we have amidst us right now. And I think that's something that's going to show up in the June GDP number that we'll get. Having said that, there are a few things I worry about. For instance, I worry about how rural incomes will unfold over the next couple of months. I don't worry about food inflation, but I worry about rural incomes. And I also worry that, in a way, if you're only dependent on oil, all you need is one great news globally for oil prices to go back up. So these are two vulnerabilities out there.
Okay. Just as a matter of detail, Samiran, I would assume that you place much more reliance on something like GST or income tax growth rather than, say, a Naukri index or a BISOM index or auto sales. I guess that is a bigger proof that growth is fine?
I mean, beauty lies in the eyes of the beholder. So it depends on who is looking at the data. If I am a company management, I would probably look at that BISOM data to figure out what it means for my own products. But if I am an economist, then I have no choice. I have to look at the GDP data, which is an aggregate for everything and not just one particular aspect of the economy. So I would prefer the GDP numbers.
Okay. Well, thanks for that. Now, Samiran, what about the growth headwinds? We have seen, relatively, absolutely strong data even from the US with their GDP getting upgraded by 50% from 1.3 going to 2%. The same quarter when even our GDP number came in 1 whole percentage point higher. But the point is that's put all the central banks on notice. Every major central bank is going to raise rates once or twice, and for us, the Fed matters. Can that mean headwinds? We are already seeing that in services exports, I would think.
Exactly. So there are three parts to it. One part is the global part, the second part is the cyclical part, and the third part is about shocks. So you highlighted the global part where there is some amount of global slowdown that everyone is trying to build into their forecasts. We have also lowered our service exports forecast, and that's why talking about a slightly higher current account deficit at 1.6% of GDP now. So to some extent, this will filter into the high-end consumption in India out of some strain from this sector. But the interesting bit is that the cyclical slowdown everywhere, not just India, but globally, the cyclical slowdown is getting deferred and deferred. We are all calling for the peak of the rate hike cycle, but that at the peak of the rate hike cycle, the higher interest rate impact on either consumption or investment is not that much visible. And the last problem is the shocks problem, which are anyway difficult to predict, which is about the weather shocks or any other kind of bad news, so to say, coming out of global commodity price shocks. If those things come in, then that can have an impact. But the primary driver of consumption, which is wages and the excess savings during the pandemic times, it appears to us that at least the wage growth in the urban segment is continuing well, not as much in the rural segment. And unfortunately, on excess savings, we don't have a very real-time data, but that's one headwind that I will be very worried of. To some extent, it will get counterbalanced by the current wealth effect that will get generated out of these asset markets reaching all-time highs every day. But overall, that's the consumption dynamics between the cyclical factors and the noise factors that I'll be very closely watching.
Okay. Pranjul, would you worry that a poor harvest, because El Nino is still a danger for the second half of the monsoon, probably from August onwards, will that, as it is, consumption in the Jan, Feb, March quarter came in at a pathetic 2.8%. Now, if we add to it poor rural incomes because of harvest, can that be a danger to growth?
Yes, Latha, I think one of the things the market is not focusing on is the early arrival of the El Nino. As in, it's come in May, June. Generally, it comes in July, August. And the problem when it comes early in the season is that it only strengthens over the next couple of months into the winter period. And then it can even impact the winter crop by impacting reservoir levels. So I think this is one big risk that we all have to be very watchful of. My sense is that if we do get into a period of weak rains over the next couple of months, I'm not very worried about food inflation. I think that can be managed. We have started off with decent stocks of rice and wheat. At this point, we can import things like pulses and edible oil because prices have fallen. Our government is doing very good supply side management. And, there's a lot of evidence that inflation has come down over the last 10 years because of government action, despite climate change, creating a havoc in unseasonal rains. So all of this, I think, is positive, and we won't really see food inflation really ratchet up. But what will give is rural incomes. My sense is the reason why food inflation is low, which is high imports, is something which will end up hurting rural demand, rural incomes, because our domestic farmers don't benefit when we import all the shortfall crops. And I think we have seen this in the data. Over the last 10 years, real rural wages have been quite soft. Rural terms of trade are more on the negative side. And that is my real worry, growth, not inflation, at least on the rural side. The good news here is that we have fiscal space. We have fiscal space.
Yeah, Pranjul, sorry I'm out of time. I just want one word from Samiran. Samiran, the K-shaped recovery is very obvious. I put it in auto sales, but it's there, even consumption not growing, but investment growing. At some point, the poor consumption can come in the way of growth.
Yeah, I mean, ultimately, a GDP which has 60% consumption cannot keep on growing without consumption picking up. The question is that the distribution between the higher end consumption and the lower end consumption is not very clear to me, that whether it's an 80-20 rule that works there. If the higher end consumption is more of GDP, then at least for a while you can continue this kind of a path. But ultimately, there will be political kind of hurdles that we will be reaching in the process. So we need a more balanced growth in some sense.
Yeah, but that is for the longer term. But as you point out, all the Cassandras who have been calling for a lower cyclical growth have been disproved, and cyclical growth at least has not slowed at all. So perhaps even with a late El Nino, we should be able to manage with a 6% plus growth, though Pranjul would disagree about the number. Thank you very much, Pranjul and Samiran, for giving us a little more color on how to understand the various nuances of growth. We wrap up on Bazaar. Chartbusters happening.